well, and that you had a fantastic week of trading, and that you are going to have a fantastic week of trading coming up. Now, as we work our way through today, I'm just going to get my timer started. Okay. All right. So much is going on in the world around us. And of course, if much is going on in the world around us, a lot of it affects us traders, and we're going to make decisions as things go along. Same things for hosting. I want to look at on the daily charts, and I'm using my 10 EMA. And for those who follow my trading and who are part of my trading and who are in my groups, you know just how powerful the 10 EMA is. And as I've said over and over again, for years I used to draw trend lines, and I fiddled around with EMAs, and I found out accidentally for me, that is, that the 10 EMA approximates a trend line. So instead of drawing trend lines, when in a strong trend, if I just use the 10 EMA, I get as much information as I would with little fiddling around with my charts. So let's use the 10 EMA to have a look at what's going on in the markets. We don't, as a price action trader, the only news I'm interested in is what my calendar shows me. And I use Forex Factory, and there's a few other good ones out there. Whenever I see red news and I'm trading during the day on the 15-minute chart, I just stay out of the market, let the news do its stuff, and I come back after a candle or two, look at it, make decisions. I don't really have to know what's going on or who's saying what or who's doing what. It does not help me in my trading. But when I look at the charts, it gives me information. So this is US 30, right? Pretty significant indicator of what's going on with the Americans. We also look at US 100 in a while, and that will also give us information. If you have any questions, pop them into the chat box and we'll answer them. Now, this is July. Okay, so before we got into that candle and that candle, okay, this is the month of July. That candle was Friday, right? Friday is the first day of the month. But before we got in, I mean, you could already have said, but hang on a second, something took place here in July. So that's the 1st of August. At some point, the bulls, rushing and accelerating up, trying to get to the skies, to the heavens. From June, strong bull trend, right? Just one bear candle, very strong bull trend. And the bulls were like, well, this is it. We we are in a bull rally here. We're just going to keep going and on and on and on. And, maybe take this to 50, 60,000, whatever it is. But the bears had other thoughts, and the bulls stalled right here. Okay. So this could have been profit taking. The bears failed to capitalize at that. Their first break of the 10 EMA, which I used to indicate the strength of a trend. So the first break of the EMA showed me that at that point, hang on a second, the bulls who were strong enough, have failed. So their strength has been broken. They're weakening. The bears could have had a chance to accelerate down. They failed, but went into a trading range. Bulls just nipped above the high they had put in beginning of July, tried again and failed completely. If you look at the close of that particular candle there and look at the open of that candle, we gapped up. I mean, the bulls would have said, yes, this is it. We're just going to accelerate up again. But they failed. Then we had 4 successive days of selling to the end of the month, and the big bear candle on Friday, tail at the bottom. So if you're trading on the daily chart, and that's what I'm sticking to, just to cater for all of us. But remember, the market is fractal, FRACTAL. So whatever price patterns you see on any time frame, they can repeat on another time frame. So what we see on the daily, you can apply in your thinking. If you trade the 4-hourly, hourly, if you trade the weekly, doesn't really matter. Okay. Now, when I see this on the daily, if I was trading the daily, you always have options, right? You can trade the breakout when you first see it, or you can wait for higher certainty. If you trade the breakout, if the market keeps going, of course, you make more profits than the guy who says, well, I need higher certainty. Let me see a little bit more follow through. Let me see if my 10 EMA or 50 or whatever it is that you use is tested. And if the market still says we're going to keep going down, then you get in. But of course, if you wait for higher probability, which is fantastic, there's less profit left in the trade. So, for example, some guy can say, "Well, I'm going to take that trade. Okay, I can see all of that, but I'm taking that trade because that's how I like to trade. The probabilities are not yet fully staked in my favor, but if it goes my way, I make more money." So, trader took that trade and got out here, made more money than the trader who waited for confirmation, pullback, and certainty. Okay, now I have higher probability staked in my favor. I'm going to take a trade. You can still take that. Your stop loss is always the same. This, when I talk to the guys that are in my groups, and I hope you are in my groups, and this all makes sense. Stop always stays the same. Don't just put stop randomly because you get stopped out more often. So if you took that trade after that, still get out the same place, there's less profit, right? So same thing here. You're either just going to put an order here and say, well, I can see that tail, but I've seen the 5 bear candles, so I am going to sell. You can make that decision. Stop is in the same place, and remember, your probabilities are much lower, but of course, if you keep going down, you make a lot more money. Where could we go? Well, here's a few things to think in mind. Bear in mind. Bears breaking beneath the low of that last month. You guys have heard me talk about this a long time. 2 prices, that high and that low, creating a measured move. A third price, that could be the initial target, right? So the bears breaking out beneath there are seeing that. The bulls know that. So the bulls, of course, would want to defend the low of June. Right. So you can take that and say, well, I can manage my trade, and if we get down here, I'll have at least, got my 1-to-1, and who knows, you might just collapse, because just as the bulls wanted to get to the skies, the bears want to collapse the market, and these numbers reduce to 0. They want to just decelerate the whole thing until this gets to 0. So you can take that, or you can wait, just like you could have waited here for a pullback. Wait to see what happens and get back to the 10 EMA or your 50, 100, 200, whatever you use, and take a higher probability trade. But the market at the present moment is controlled by the bears. Bears are happy that we close beneath the low of July, of course, gives them more opportunity, but we're just in a bigger trading range. So you got options. Put an order here, wait for the pullback at higher certainty. If I was trading this on my 15-minute chart, and this is the beginning of the day, I'm just going to wait for a pullback. Okay. Had this candle closed on its low without the tail, in other words, without bulls buying into it, happy to sell with a wide stop. So that's just, what's happening on the US 30, all the drama that's happening, whether it's wars or tariffs or whatever. Well, let's look at how it's reflected in price so we can make our decision based on that. If we go to the other compatriot 100 companies, US 100 tech companies. Now, this is absolutely interesting. Even if you've never heard me speak, if you just consider the 10 EMA as an indicator of strength. I mean, look at this. This is just going back to April. Okay, that's what I've put on my charts. Bulls have been super strong, absolutely beautifully strong. First close beneath the 10 EMA, and then they just came back again, tried again a couple of times. It's just been strong all the way up, and then boom, on Thursday, there's this big bear candle. I mean, that must have surprised quite a few guys who were seeing this and say, well, we're just going to keep going, going, going. All we need is just one candle and then keep going, like we've been doing here. Outside candle, if you were in the market, if you had taken trades, at that point, you should be finding somewhere to put your stop, higher, low, or whatever it may be. And just hoping to see what happens, because if you get that, you get stopped out, but you bank some profits. Outside candle, head follow through, always critical that if you see anything in the market that's indicates that there's a change in the forces controlling the market, from the bulls to the bears, let's see follow through. And that's something I want you to take out of today. So breaking the 10, let us see follow through. So if these guys are as strong as these two candles have shown us in the tech stocks, let us see follow through. A beautiful candle closing on its low. The only challenge to it is there is a higher low in here. Pretty simple to see. If you didn't see that, well, you can see the low of June, of July. I'm always looking for how much money there is to make before what is obvious in front of my eyes kicks in. Okay, so what's obvious in front of us is low of last month, a pretty key level when you're looking at the daily. So if I'm taking that, my stop has to come here. I don't put random stops here. There is a technical level to put a stop. So if you're going to take that trade, now I'm going to do that because I'm not going to take that trade, and I'll tell you why. If you're going to take that trade, your stop is here. You are saying that you are 100% certain that the market has a chance to get to your one-to-one before anything gets in the way. Well, the only problem is what will get in the way is the low of July. So there isn't one-to-one there. I would not take that. I'll just let that go. If we break out beneath this tomorrow and close beneath it, then you can put an entry. If you want to take a breakout trade, stop out here or wait for the pullback. Now, guys, let's play a scenario. Let's play out something. Let us assume, big assumption, but to illustrate the point, let us assume that the month of July started here. Okay, if the month of July started there, if then the low of July would be here, right? In which case, you would be saying, well, the key level looking to the left is the low of July if July started here. So I would happily take that because I have at least one-to-one reward potential before the market gets there. Anything can happen, but the fact that I have that gap allows me to manage my trade. How do I manage my trade? Get into the market, put the stop in the right place. When I get follow through, start to trail my stop down, and then that's how I manage trade. Okay, so bearish doesn't mean the world has collapsed. Oh my goodness, doesn't mean whatever is caused this, and we're not going to go into the fundamentals and the politics of it because I don't know enough about it to comment because I don't follow it. But whatever is happening really is irrelevant from a price action trader's perspective in terms of decision making. Okay. The good thing about it, guys, is that the market is not doing this stuff. If you're trading this on the daily, it's not doing this now. I mean, goodness me, George, where do I get in with all these? It's going up, but it's just tight trading range, right? But now when it starts to do this, fantastic. Big candles, good opportunity. We can see things clearly. Wait for pullbacks. We know where to put our stops. Well, I get excited with price action. I'm sure the guys who sat through my course last week probably say, let's go, buddy. All right. So what would I do with NASDAQ 100 if I was trading the daily? I would wait, get follow through to close beneath the low of July, or wait for the pullback and then decide how to trade thereafter. Okay, for the sake of time, let's look at the currency. And if I have time, then I'll come back and look at UK 100. There is pound versus dollar. I absolutely love currencies trading, because for some reason, in terms of looking at them on the lower time from the 15, when the moves happen, they do work, right? Quite well. You get your one-to-one, two-to-ones, and whatever the case may be. During the day, things happen quite fantastically. So I love them. There's enough volumes. I mean, whatever I look at, they say trillions and trillions going through currencies. That's what we're looking for. We want the most liquid markets to trade. Okay, so what is going on? If you just opened your charts and looked at it, and if you think as a price action trader, you say, okay, I can clearly see that was our high of July. Bears were pretty strong, bit of a sketchy start to the month, but good for the bears. Bulls tried to reverse it, couldn't get above the beginning of that bear breakout. The micro double top, fantastic. If you've been trading this, you would have at least taken that trade, right? And put your stop up there. That's you don't put your stop here. Well, I never do. You can put your stop up here above the trend. That'd be fantastic for many reasons. Bear breakout, micro double top, two bar reversal, lower high. If you wanted more certainty, you would take that and have to deal with the problem, okay, of managing the trades. Now, why would I be keen to take that trade with that ahead of me? Because this is not a key law. It's a law of the month. But if I look to the left, the law of last month is the most driving factor. We've already doubled bottoms up, I know, at it. Bulls failed to get higher. Bulls could have pushed much higher. So I'm happy to take that and manage it. And the next key level, if I'm looking to the left, is low of that previous month, which is where we got to. So you have had opportunity there. But now coming into this present month, double bottom, bears have had their satisfaction. They broke beneath that trading range. We got to one. You've heard me speak about this many times. Whenever you see a trading range and breaking up beneath it, 1-to-1 is the goal. So there's the 1-to-1. Bears who sold and when here took a profits made money, they saw the double bottom. They have gotten out, been stopped out, or they could have kept their stop here, hoping to get acceleration down. Okay. But now what's going to happen this month? Absolutely nothing you should be doing with this if you're not already managing a bear trade, right? Where you've tightened your stop, maybe got stopped out. You've got to wait for one of two things to happen. If the bulls are strong, they have to give us a follow through so that this double bottom holds. Then I can decide if there's a breakout there to say, do I trade the breakout from the double bottom, or do I want to see more proof, a higher low? That's decisions that you can make. But out of the doji at the double bottom, nothing to do. Okay, if the bears are strong and they give us a bear breakout beneath here, if you are not already in the trade, you need to wait again. You're breaking out beneath that trading range from a bull doji, from a double bottom. You need to wait and see what's going to happen. So eyes open, guys. Chin up, chest out. Let's wait. Look at this. Isn't this absolutely fantastic? Let me show you something quickly. Bears, very big candle. If you took that, because you're looking at 1-to-1 and you know the low of the month is here, into the trade, pull your stop down. You see that the next day, you got to celebrate when you see that. You got to pull your stop down to there or midpoint of that, or there. Bank your profits. But in any case, if you didn't, because big candles don't like it, that is perfectly fine. Now, what do you do? The decision looks very simple here. Very simple is not the word. Very clear as far as price action is concerned. There is low of the previous month. Here we are, and we are back with a strong bullish higher low double bottom. This is fantastic for the bulls. The bulls need follow through. If the bulls give us follow through, we're going to look at the strength of the follow through. Remember, the key level is the high of last month. We are now in a trading range because high low, that's double top, that's high low, double bottom. Bulls need to give us follow through, and I'm not going to tell you that it will never get there. But if you look at the size of the candles, big bull candle might be somewhere within here. We're still within a trading range, but you must get ready to buy. If you get a pullback, then you get ready to buy and make sure you get your 1x risk reward gap between there. Let me look at the question. If it's a question, German 40 will go up just now. German 40 to go up just now. Okay, so we gotta wait a little bit. Again on euro, we're talking on the daily. I mean, man, if you trade in 1-5, 15 minutes like I do, and you see this, and you see the bulls breaking out above here, you gotta find ways, one of our strategies to get in, right? Or if we pull back within here, etc. But let's have a look on the daily. So there's two currencies for you to just bear in mind. Let me look at Aussie yen, and then I'll go to German 40. I'm gonna have a sip of caffeine. We are in August, and this is theoretically the last month of our winters. Our winters can get quite chilly when we got to 1 degree, 2 degrees Celsius. So it gets a little bit chilly. Can't warm the house up enough. All right, this is interesting. What is interesting about this, guys? I mean, I don't want you to pop answers in, but just when you look at OZN, what strikes you? What strikes me is that we got 10 minutes to go, so we've got time. What strikes me is that this bear candle is the largest candle that we've got, since April, May, what I've got on the charts here, right? It's larger, since May. April had two large candles. Okay, but I've just put in the middle here as I'm trying to avoid the video blocking it. It's the largest candle we've had. So this is quite dramatic in terms of this cross OZN. It's pretty dramatic. Now, what is required for you to trade this short? Could you trade this short? Man, you can do absolutely anything that you want if you know how to manage your trade. So if you're going to sell that, you're going to realize there is the low right here. It doesn't give you 1 times reward. You could be scalping. Scalpers don't care, man. They just take that. It goes, poof, breathes a bit, they take their profits. They do that 100 times a day. If you are a scalper, by all means, go ahead and scalp. I think it's pretty hard to scalp on the daily, But if you do that, you can say, well, George, I'm pretty happy to take that. I'm watching this all day, doing other things. As soon as it is that, tighten my profit, my stop, take my profits, fantastic. But I would not touch that because I don't like making the assumption that I'm so right that there's enough bears in the market to get to 1-to-1 before they pull back. So I'd rather not. But if this baby was down here, if it was down here somewhere, I'll be able to try that, but it's not. That is the law of the previous month, so I wouldn't do anything. But the fact that is so strong, the bears need follow through. If they were strong enough to do this, they need to give us follow through tomorrow, close anywhere beneath the low of July, then happy to take a breakout trade with a stop up here, or to say I need more probabilities. Let me wait for follow through. Let me wait for a test of 10, 20, 30, 40, 100 EMA, 200 EMA, whatever you use, and then jump into the market. But this is good for the bears, but we need follow through before we can do anything else. It's fantastic that you have one candle just stopping all this rubbish that doesn't help us on intraday on 1.5. sorry. It doesn't help you daily traders. It doesn't help traders, daily traders. For intraday traders, we love it. For the 15-minute that I'm trading, love it. I mean, that's buying all day, selling all day, goes up, goes down, you buy, you sell. These dodges on the daily are absolutely beautiful. Of course, if anything sets up in the session that you trade in, market always looks beautiful end of day, but in your session, you might go back and say, oh man, this setup, like for me, I'm in Central African time, European time frame, and early US session is beautiful for me. But it might set up in the Asian session, or it might set up in the late US session, and nothing happened in my day. So it could be pretty useless, but sometimes it's pretty useful. Let's have a look at DAX. Fantastic. Isn't this interesting? What have we just come off? Well, we came off someone who has got almost the same price. You see all these markings that I had. If you look at the price on the axis, 24,000 to 20,000. That's why those seem to repeat themselves. So you just have to clean them up. I see this quite often. That's what I know what's happening, because on my when I'm trading, I have on my laptop, on my desktop, I have one screen that I trade all my currencies off. I don't take multiple currency trades at the same time. So I flip through 4 currencies. And when you flip through some, when the pricing is the same, you can see some other lines, but I'm just used to it. What's taking place here, guys? Immediately, well, let me not say immediately. When you put things in, it becomes immediately, you can see, right? There was the high of July. We tried a few times. here, there, and eventually, right at the end of the month, bears tried one more time. I mean, bulls tried, failed, bears, and then we had follow through. Now, what is interesting about this candle is it closed beneath the low of last month. So that is pretty exciting. The challenge for the bears is the low of the previous month. So if you're taking this trade here and on the daily and you're going to sell, your stop has to be at a technical level. Your stop is there. So if you're taking that, you are making the assumption that I'm selling this. I can see the low of June, but I'm so convinced the bears are super strong. They're going to just smash through this and at least get to that level so I can manage my trade. I wouldn't do it because that's a key level I cannot ignore. But if you take in that and you put your stop there and you are happy to risk it, that market can turn back, fantastic, do that. So I'm not saying don't trade. I'm saying I prefer to see at least a one times risk reward clearance before the next key level. So what I would do is wait to see follow through on the daily chart. If I see follow through and I see a bear candle the next day closing beneath this low, I'm happy to sell beneath that low and I will put my stop above here. And if I get a pullback, I'll just manage it because if I sell beneath this low, there is nothing in the way for the for the price to drop. It can keep dropping from 20, 19, 18, 17, 16, 15 until it gets to zero. But if I'm selling beneath here, based on price action, the next 1-to-1 is here. Okay. Two prices, high and low, measured move where, because it's a measured move, bears are going to be taking profits. Bulls are going to try and come in to initiate a bull run again and make the whole thing with the bears fail. This is fantastic for the bears because they're coming off the highs. If we were to do that, that's all-time highs that they're coming off. So to have follow through, I mean, we went up there to an all-time high, 2 bear candles. We tried a few times, 3 times, wedge test, 1, 2, 3 of that high, failed. Micro double top, I'm getting all technical. It's pretty irrelevant. Micro double top, lower highs, but all you gotta see is bears accelerating down. This is fantastic from all-time highs. So bears want to keep selling. So if you don't take that higher risk trade, wait for greater probability, put the stop in the place, correct place, or wait for pullbacks. If bears are strong, we're gonna go far. But of course, because it's a beautiful day, if you trade in intraday, we trade what we see on the chart as the day unfolds. But if the bears, if you go to your low of yesterday here and the bears start to sell through that, even if it happens at the open of the London session, you get a beautiful bear sell off like we had last week on the Monday on the UK 100. Just got to get in and sell and get rewarded. For the guys in my coaching group, I've just posted that trade that I told you guys about. Monday last week, UK 100, a beautiful, easy 2-to-1 strategy based on our strategies. The bears sold off. If it happens again tomorrow, we just got to jump in and trade. Do I have any other questions? No, I don't have questions. Guys, thank you very much. Sam, thank you for hosting. We are done. We will see you again next time I'm around. Take care and bye-bye.